Good afternoon, ladies and gentlemen, and welcome to this week's trade review. Markets have been very choppy today. We're currently trading down towards the lows of both the DAX and the Dow as I'm currently talking. Should have a quick look at the Dow. It's starting to flirt with the 28,000 line, as we can see there. So it'll be interesting to see whether we can hold this level. Big moves off of the lows yesterday in the latest or in the latter part of trading, which again we saw first thing this morning as we traded down towards about 28,180. So you can see we've got a slightly different setup today. Hopefully the images are a lot clearer on your screens. A few other things that we're going to introduce over the next couple of weeks, as well as we move towards the full YouTube channel that we're going to be running with Jason Sen, which will have a lot more technical analysis with it as well. What I do encourage you all to do, though, is to continue sending in your questions, and as we go through the next 18 minutes or so, I will do my best to get round to all of those and follow up with any of the ones that come afterwards. But as I said, choppy trading. It's been very good to me over the course of today. I was out at lunch when somebody sent me some comments about trades moving into profits and the fall that we saw. Obviously, it was non-farm payroll today. Non-farm payroll numbers came in. The increase in jobs was pretty much on point. The average hourly earnings was much better than expected at 0.4%. And then we had an unemployment rate which came in an awful lot better than expected at 8.4%. So the recovery continues. How much you buy into the recovery is obviously up to you. As you know, at these levels, as we've traded so higher on this, what can only be described as a V-shaped recovery from the lows that we saw in March, I'm reluctant to buy at these levels, and that's certainly paid off the last couple of days. For those of you who have signed up to Bull and Bear Cap, you'll know very well that I was absent at my son's birthday yesterday afternoon, so I didn't take part in any of the collapse from the highs in any of the US markets, but didn't really need to. We had some good trades throughout the course of the week, and the one thing for me, those are the results that we're showing there. The one thing for me throughout the course of the week is the consistency. Nice green numbers every single day. 149 pips on Monday, 186 Tuesday, 249 Wednesday, 214 Thursday, and then the real bumper today at 418 points. The one thing to note, and I'm always looking for the negatives, there's no point in me going and highlighting the positives. You'll know where they are. They're in green, and you'll see in these trades as they occur during the course of the week. For me, the things that I focus on are the negatives, and I think there's nine trades there to the downside. One of them was a paired trade, the gold trade today. So really 8 losses, one of them quite minimal. The euro dollar trade from yesterday, which lost 7 pips, but the others are pretty much all stops that I encountered during the course of the week. So a significant stop every single day. 125 points on gold on the Monday, 60 pips on sterling on the Tuesday, gold again on the Wednesday, 110. 2 trades there, both in the DAX on Thursday. I think the DAX caught a lot of people out yesterday. And then again this morning, a stop on the DAX. The one thing that I suppose is consistent amongst all of those is that the stops were pretty much at the close of the day, and then the markets were pretty much at the high of the day, and then the markets turned and went in the opposite direction, and all of those trades would have moved into profit. So some thought certainly over the weekend in terms of the width of my stops, whether I should be giving them a little bit more breathing space. Notably on Tuesday with sterling, I short the market, stopped out at 134.70, which I think was about 5 or 6 pips off of the high of the day. and then the market closed down 100 or 100 or 120 pips on that particular day. So, you know, the direction was okay, and we all know that timing is, I'm not going to try and excuse these trades away, timing is the most important thing, but the market did fall away, and just the extent or the width of the stop is something that I'll take a little bit of a look at in relation to that. Likewise with the DAX today, another trade that's fairly fresh in the mind, was short the DAX at 12,981 this morning, stopped out as the market rallied up towards 13,100, and I think the high for the day in the DAX was only about 16 pips higher as well. So, you know, definite food for thought, things that you're looking to improve upon all of the time. The things that are in green are working, and they're what totaled up to that 1216 pip return that you see on your screen there at the moment. There's a summary of the trading days. Obviously the best day of the 5 is Friday, 418 pips. Just in the summary, in terms of looking at the two trades, and as you know, I don't trade a great deal of currencies, but had three currency trades this week and negative 51 pips across those three trades. That's why I don't trade currencies. They're not volatile enough for me, number one, intraday, to keep me really in tune with what's going on. But equally so, you're coming up against big banks who've got big orders, and for me, it's just not worthwhile competing against them. Gold, some stops early in the week, but still returned a profit of 292 points from 22 trades. The Dow, by far the biggest return of the week, 927 pips off of 37 trades, and the DAX pretty much not worth getting out of bed for this week. 20 trades, 48 pips, and as I said, the DAX has did stop me out yesterday and again today, and that's the reason for the negatives coming there. I think, again, looking back at the week's trading, the things for me that I wanted to talk to you about, again from the negative side, on Thursday I was probably into the trades a little bit too early in the morning. I cautioned you, or I mentioned not doing this earlier in the week, but by Thursday I'd obviously forgotten my own advice, and the DAX and the Dow trades that I was into, or more specifically the DAX trades that I was into that I eventually got stopped out on, I was into those far too early in the morning, and whilst the market did collapse and come back down and finished far lower than the levels that I entered at, it was had I got into the trades or timed the trades a little bit closer to the opening European bell, which is what I'd advised at the beginning of the week, the story there would have been very, very different. So 1216 pips on the week, it's a fantastic return, but I for one know that it could have been an awful lot better, and should have been up certainly above 1500 pips on the week, but we're not going to complain at all. Obviously we had a tech sell-off yesterday, missed by me as I've already mentioned, but we saw the market, or the Dow, closed down about 800 points. The Nasdaq and the S&P I think were off 5% and 3.5% themselves, so not quite in correction territory at this particular point, but as the markets continue to move lower, and I'll just bring up the Dow again quickly, you can see there that we've gone through 28,000, we're trading 27,880 at this time, and have been a bit lower, been down to about 27,800, but are recovering a little bit now. Now I'm not going to trade for the rest of the day. I'm happy with the return all of this week. There's no point being greedy, and if I start to force trades at these levels. One of the things that's worked quite well for us worked quite well for me over the last couple of days have been the paired trades. So the idea of selling both the Dow and gold at the same time. Both of them have had tremendous rallies over the last number of weeks, and a correction was most definitely on the cards. We've started to see one in the indices. I think there's been a couple of occasions, even during the course of today, we've seen some big sell-offs in gold as well. We can just look at those. You can see the move there over since early morning when we traded up to 1940. We're back down to 1923. Gold is going to gather a little bit of support because of this. The concept of a safe haven, but for me, both gold and the Dow are a lot higher than they probably should be, and I think there is still potential to run that pair trade throughout the course of the day. If you do run the pair trade, I think if it's working on the day, you can do it a number of times. I think I did it twice there, just around the opening bell, and had about 100 pips return on each of those. So I want to talk a little bit about non-farm payroll, but there's a couple of quick questions coming in, so I'll just put this back onto the normal screens. So Luke is asking, what indicators do I prefer to time my entry points? I do, and this ties in with Chris, who's asking, do I use 5-minute charts for entries? And going back to some things I've said in recent weeks as well, in terms of looking at in terms of looking at where the markets are going to go and developing my bias in the mornings, I start off looking at daily charts and work my way down to about a 30-minute chart. That will give me an idea of where my resistance and support is. The thing for me, which I think is a lot different to other people that you will hear talk about trading, we need volatility in the market so that the market is moving, and therefore you can trade it and make money. If you have no volatility, the market's not going anywhere, and you can sit there all day. You can trade as much as you like, but you're not going to make any money. What I have found over the last few months is, and beyond that as well, so over the last couple of years, is I've developed a pattern where I like to trade certain times of the day. So I'm not saying forget the technical analysis, but for me it very much becomes secondary. So I'm looking for a sentiment during a certain period of the day. And I think you can identify it from the trading. For those of you who are with Bull and Bear Capital, you can identify it when you see the trading coming through on the Telegram system. But I trade the European Open, or just before the European Open and the European Open. I think there's always a move between about 9:45 and 10:30. You saw that again this morning with the rally to the upside, which ultimately wasn't sustained. I think we got up to about 28,520 before the Dow fell away. And then the third time frame that I like to trade is between about 1:30 in the afternoon and up to and about 10 minutes after the opening bell in New York. So that's where my focus goes. Now, if you try to trade on technical indicators around those particular time zones, it's very, very difficult. So for me, the times or the time frame, the time period becomes more important, because my logic says the market's going to move. If I get the sentiment at that particular point right, then I'll make money. And if you can hit the market on those 3 different occasions during the day, and get some decent trades into those periods, that's really where the focus is for me. I've spoken a lot about the opening bell orders in New York. I've been doing those all of this week, and I've done it quite a lot over the preceding weeks as well. And I hit those trades a little bit heavier than I would the trades that I do earlier in the day. But the key for me is the time frame. So I don't get fixated in terms, time. The time of day, I've got to be careful what language I use. When you're looking at the charts, I think people sometimes get fixated on whether you're looking at a 15-minute chart, a 30-minute chart. And I know that everybody wants to learn and wants to develop their trading strategies. But I will look at 5-minute charts for the entry points. But for me, I don't mind being slightly wrong for a short period of time before the market changes. So for me, it's all about developing that bias in the morning, getting to that particular time of the day, and then implementing the bias. So if I've decided that I'm trading from the short side, if there's a slight rally, I'll sell into it. If I've decided that I'm going to be buying, I'll be looking to buy in on dips and taking advantage of those. But the key for me is it's the time of day that I want to be trading. So I don't think about what the market's going to be doing at 11:30 in the morning, because I don't want to trade that particular time, because in my experience I'll be sat in front of the screen looking at the screen, and you end up forcing trades that you don't really want to be in. So Niall has just got a question there that he wants a point of clarification on. So when I say bought back on Telegram, does that mean you've closed the sell trade and opened a new buy trade, or you simply cashed out? So using your language rather than mine, Niall, it means I've cashed out. So I've closed the sell trade. So if I've bought back, I'm then flat. There's nothing left in that trade. So it's definitely not initiating a new trade. And I keep the language as simple as I can. So it's either I have bought or I have sold if I've initiated a new trade, and then either bought back or sold or closed when it's an initial buy order. So hopefully that explains that. So I'm just gonna. We only have about 2.5-3 minutes left. So if you have any more questions, you might just get an email from me. If I do see them pop up in the next few minutes, I will take those. So I'm just looking here at a 5-minute chart on the Dow Jones. So I'm just looking behind my mic at the same time as well. So I'm just looking here for the time of non-farm payroll this afternoon. So or at 1:30 this afternoon. So just with the screens there, so you can see there was a little bit of a rally. I think we went up to about 28, 580, 590 around here, maybe a little bit earlier than that, and then we've had this sell-off. So the one thing I wanted to say about non-farm payroll and about any piece of data is that, number one, as you'll know from the trades that I put through, that I don't like trading the data necessarily. What I prefer to see is the number be announced. What you'll see is an immediate reaction. It can be in either direction, of course. Then the information is digested. People analyse it. We get some economists looking at it, and in-house in the banks they'll be presenting recommendations and their ideas on the numbers and what that represents within the market. And then you'll either get a continuation of that movement or you'll get a reversal. And what we saw very clearly today, if you can see from this point, is definitely a reversal. So the numbers are good, right? So the numbers are good. The market should be going up, but we've seen a continuation of this profit taking to the extent now that we're trading down at 27,800 from where we were around the non-farm payroll numbers being announced, where we were trading up at 28,500. And once you start to see that sell-off, people will join that sell-off and push the market lower and lower and lower. So wait for the number. This is my experience. It's not something that I can convince you all of. And sometimes I even make the mistake myself of trading before the number. But always, if you can, unless you have a trade on, and this morning I already did have a trade on, so I've kept the trade on. It's turned and it's gone in my favour, and I've taken profit. Had I held the position, it would have been significantly more profitable, but I was happy to get out of that and just move on from that point. But let the number come out, and then let the move happen, and then decide what you want to do from that particular movement. So has it dropped enough for you to encourage you to buy into the market, or have we rallied to a point where you think we're going to start to see a correction from those levels? So I'm out of time. There's a couple of comments on there just in relation to the week that we've had. Yeah, it's been a great week. Like I say, I'm always looking for the negative. It could have been better. Thank you all for joining me today.